Hello and welcome to this live webinar where we'll be discussing the merits of Japanese smaller companies. This is a 50-minute program brought to you by Citywire and the team behind the Baillie Gifford Shin Nippon Trust. My name is Amy Maxwell, I'm from Citywire and I'll be presenting today's broadcast. Today we'll be joined by our guest Praveen Kumar, who is lead manager on the Baillie Gifford Shin Nippon Trust, which we'll be focusing on today. He's also lead manager on the group's Japanese Smaller Companies Fund, deputy manager on the Japan Trust, and co-manager on the Baillie Gifford International Small Cap Fund. So certainly well positioned for what we have in store. Now a little bit about how we're going to run today's session. In the first 25 minutes, I'm going to interview Praveen and then we'll be putting your questions to him in the Q&A session in the closing 20 minutes. If you have a question for Praveen about the trust or investing in Shin Nippon, you can submit it at any time via the Q&A box in Zoom. Now let's begin. Welcome Praveen, thanks very much for joining me today.
No worries, thanks for having me, Amy.
So given Shin Nippon seeks out young, disruptive, fast-growing small companies in Japan, the trust, I understand, has a natural bias towards online companies. Can you tell me a little bit about some of the most recent portfolio additions in this area?
Sure, Amy. So as you said, we have a natural bias towards these types of fast-growing, disruptive, entrepreneurial smaller companies. And in our experience of investing in Japan, which goes back to the early 80s, we have found that the online segment is one where we found some of our big winners. So there tends to be a bias within the portfolio of these types of internet-related businesses. But having said that, we run a portfolio of between 40 and 80 stocks. So we do have a number of businesses from various other sectors like manufacturing, healthcare. We have a few brand-related companies. So it's a fairly diversified portfolio. But within the internet companies that we quite like, a couple of names that I'd like to highlight, which we bought more recently. Hopefully they give you a flavor of the type of company that we're looking for. So the first example would be a company called AnyChange. Now this is Japan's largest online energy switching service, a bit like USwitch here in the UK. Up until about 6-7 years ago, the energy market was essentially an oligopoly where the end consumer didn't have the freedom of shopping around for the best energy deal like what we tend to do here in the UK. We tend to take that as a given. But unfortunately, in Japan, that was not possible up until about 5 to 7 years ago. So there was a big deregulation that happened, which split the transmission and distribution of energy between the oligopolistic companies, and that saw a flood of new independent power producers come in. And that also raised awareness of the ability of switching to better tariffs within the consumer space. And that's where AnyChange came in and provided them with this platform. That's just one part of their business. The other part of the business is where they provide a software SaaS based platform that helps energy companies manage their load, their energy load balancing activities, and basically helps cut down on energy waste. So quite a disruptive, fast-growing business that's right in the middle of an ongoing deregulatory phase within the industry.
So that's quite a sort of democratization that's happening in that marketplace, and the technology is really enabling that to take place.
That's absolutely right. And you've got to remember that the energy market, as most of us know, is pretty complex. So when we think about switching, because we are just logging onto a website and searching for all the plans, there's a hell of a lot of work that goes on, a lot of analytical work that goes on behind the scenes. So it's not simply a case of building a website, getting the companies to load their plans on it and off you go. There's a hell of a lot of data analysis that happens in the background, which is pretty complex, and that's what AnyChange have seemingly managed to crack. And because they've got this first mover advantage, a lot of other companies have tried to do a similar thing, but they failed. But AnyChange has managed to kind of build a set of artificial intelligence related algorithms that run in the background. We believe they are in prime position to benefit as the overall market continues to deregulate and grow, and as consumers become comfortable with the idea of switching in Japan.
And there's an acronym that you use there, SaaS. Is that software as a service? Do you want to explain a little bit more about the investment proposition there?
Yes, so software as a service is a concept whereby instead of having software installed locally in your PC or within your office, you basically have a very, very light front end user interface, a bit like a website where you put in your username and password, and all the heavy lifting in terms of sending the requested data and sending your responses back to the end kind of user in terms of the companies, all that happens in the cloud. And by the cloud I mean it's a huge number of servers that are located in some remote place, and all the calculations and everything happens in that sort of what we call as a cloud. What that means is you don't need to have really heavy, large software pieces of software installed on your laptop. Your laptop can be, very, very light on software, and it takes away the computation aspect into the cloud, and you can run a very, very lean laptop or a lean machine, for instance, and you basically pay a monthly fee for just access to this kind of software. So the term that we use as software as a service is becoming very, very common. A simple example would be something like a Dropbox. So, it's an online file sharing and storage tool. You don't really store the files locally in your laptop. Everything is stored in the cloud, as it were, which is, a huge number of servers spread globally that Dropbox manages. And what that means is you get on-demand access. It doesn't cost you an arm and a leg like what it used to with conventional software, and it's very scalable and really, really fast.
I
So
mean,
that's the advantage of.
and that's fantastic for entrepreneurs of businesses and fast moving kind of businesses who are trying to scale. And just the type of businesses that would have really done well during the pandemic. But since we're 2 years on, the tide is shifting somewhat. So let's just address this up front. The
Yeah.
growth business that is the growthiness of these companies, it has stalled somewhat. So do you want to tell me a little bit how you're navigating this period and what you think about the market dynamics right now?
Yeah, sure. So the first thing I would like to highlight is what we are trying to do with Shin Nippon, and indeed with all of our trusts and funds across Baillie Gifford, is to play the long game. And by that, what I mean is we are investing with a long-term horizon, typically 5 years and beyond. And we have a very, very explicit high growth style, which means that we always look for companies that are disrupting industries that have a massive growth opportunity and have, in most cases, quite unique and differentiated business models, a bit like the example of this energy price comparison company I mentioned. And we believe in the very long run, these are the types of companies that are likely to win out. What that means is there will be periods like the one you alluded to just now, where these types of companies fall out of favor. And if you look at the share price of a lot of these companies, you would think that something's gone horribly wrong. But the fact of the matter is, operationally, these companies are continuing to grind out really high rates of growth. It's just that the market environment around these companies has, they've fallen out of favor. So essentially, we've seen a number of headwinds for these types of high growth companies. During the pandemic, as you mentioned, they did exceptionally well. In some cases, even for us, we felt the share prices had run too far ahead of the fundamentals. So there was, an expectation that there would be a correction at some point, which we've seen. But there are a number of other macro factors that have contributed to the really weak environment in terms of the stock markets globally that we see for high growth companies. Just to give you a few quick examples, people are concerned about inflationary pressures. For instance, you may have seen recently in the UK, Bank of England is in the process of raising rates simply because the inflation rate has gone to quite high levels. In the US, we're seeing inflation rates of 7% and above. So there is a reasonable degree of concern amongst investors as to what the current level of inflation would do for high growth stocks. It's generally considered unhelpful. Added to that, you have the whole situation with Russia, Ukraine, and the Western world. Is Russia going to invade Ukraine? What is that going to do to the energy prices, to the oil price, which again feeds to the cost of energy to the end consumer. And again, we are, at least what I feel, we are at the tail end of the pandemic. It feels like we're seeing light at the end of the tunnel, and it doesn't feel like it's the light of an oncoming train. But there are still a few restrictions that have to be eased, much like in the UK. And from what we've seen in Japan, the rest of the world seems to be going in one direction as far as the COVID restrictions are concerned, but Japan is still stuck and seemingly edging in the other direction. So a bit of normalization there would also help. So in conclusion, I would say that very very strong performance in 2020, coupled with a lot of these macro factors have worsened investor sentiment towards these types of high growth stocks, but fundamentally they're still continuing to churn out really high rates of growth, and that is what is important to bear in mind, especially for us as long term investors.
Because structurally, this is the way we are going to continue working, isn't it? We are going to be using online tools to facilitate our business processes. We're not going to be going backwards, are we? So it does look to be going in that way.
No, that's absolutely right. And this kind of a change in behavior that we're seeing, not just here, in the UK, but even in Japan, remote working is definitely taking root. There are numerous pieces of evidence to support that, and that kind of a change in corporate mentality is creating opportunities in a surprising range of sectors, not just the tech sector, but things like housing, for instance. So people are suddenly moving out of Tokyo because they can't find bigger sized houses which have a study, for instance, etc. So that's creating opportunities for one of our holdings called Katitas, which is a house renovation specialist. And it buys really old houses and remodels them to a very high standard. It sells them at half the cost of a new build, and on the outskirts of Tokyo. So that company is seeing pretty strong levels of demand. So yeah, I mean, you're seeing a number of areas of opportunities emerge outside of the tech sector as a result of changing habits, working habits within corporate Japan.
Excellent. Okay. Well, let's stay on this sort of technology, but less about kind of the online technology, more in sort of specialist manufacturing. I mean, Japan in the 80s and 90s was known as being sort of very high tech. Lost its way a little bit, but by the sounds of it, you are finding lots of innovation, particularly in this specialist manufacturing area.
That's right. And I think there's probably some merit in clarifying what tends to be the common perception that somehow Japan has lost its lead in technology. And that purely comes about because people tend to view Japan still from the prism of the big conglomerates like your Toyotas or your Hitachis or your Panasonics. And these are companies that are, quite traditional, quite old. And the way I would tend to describe them is these are companies that are looking to survive.
Yeah.
We are interested in companies that are looking to grow. And the big growth opportunity is not in these big companies in Japan, but in the mid and small companies that are still obscure. They're flying under the radar. A lot of people, even in Japan, don't know about these companies. And they have already established world leading market shares in some key areas. And to give you a few examples, we've recently purchased a holding in a company called Toyo Tanso, which is a specialist semiconductor material manufacturer. So they are specialists in carbon-based semiconductor equipment, and they have close to half of the global market. And as you know, there's a significant shortage of chips globally, and people, can't produce them enough. Backlogs are building to record levels, and this company is a vital cog in the supply chain. So they are, adding extra capacity to try and ease this issue, and their order books are, at record levels. They recently announced full year results, and if you see the growth rates that they're achieving, it's actually pretty similar to what an internet company would achieve. 50-60% profit growth year on year is pretty amazing. And these are companies that still trade on very, very low multiples, like 12 times price to earnings ratio, 13 times. So you have an entire swathe of companies like these that have established world leading positions in critical aspects of global supply chains. And that's where I think you would get the real big growth opportunity in Japan, and not in the big traditional kind of names that people tend to think about.
And I suppose the applications for the semiconductor use, which is what you're talking, that's the building blocks for the internet basically. But the second order effect of that is the new applications within healthcare, within 5G telecommunications. I imagine is massive too.
And that's absolutely right. I think historically, one of the biggest users of semiconductor chips has invariably been the auto sector. And with the pandemic, obviously, travel in most cases went to zero. So, people were not buying new cars, and, there's very, very little travel happening. But the flip side of that is there was significant demand for consumer electronics. So, if everyone's working from home, people want, iPads and laptops, and, you talk about console gaming, for instance, that saw a massive boost. So a lot of the supply of chips that used to go to the auto sector actually was diverted to these sectors. And as we discussed earlier, the demand from this consumer electronics related sector, if anything, is continuing to grow. It's not sort of, plateauing. So we have a very somewhat bizarre situation where the biggest user of chips is struggling to get chips. And you've got this other industry that's hoovering up whatever's there on the market. And all the semiconductor equipment suppliers, all the big chip manufacturers are really struggling to kind of fill the backlog. And with the spread of electric vehicles, which actually use even more chips than conventional, gasoline cars, you could almost see a situation where, for the next 5 to 10 years, you would have a very, very strong backdrop for these types of companies that are trying to solve the current crunch in the semiconductor industry. Another example would be a company called Geol, which we again own in one of our larger holdings. So it's developed a very, very special piece of kit that allows you to directly etch the circuit on the silicon. So historically, you used to use what we call as a mask blank. It's a bit like a stencil, and you fire a beam of electron through the stencil, and then that would etch the circuit pattern on the silicon. Now, the stencil is the biggest cost item within that whole process. And Jules developed a machine that does away with the use of a mask blank. You can directly write on the silicon, and they basically got 100% of the market, and their order books literally doubling every year.
Wow.
So you have companies like these. You talk to some Japanese fund managers, etc. Even they wouldn't have heard of a lot of these names, which is what makes it so exciting for us.
Well, it certainly looks like they've got a long tail of business. There's a global demand. Okay,
Yes.
let's now move on to another kind of misconception maybe around Japan is demographics. Obviously, it's always a talking point. Aging population, and it's also had negative interest rates since 2016, doing very little for savers in the market. So I understand a wealth management firm that you've invested in is trying to innovate and improve the situation for the younger generation in Japan. So let's hear a little bit more about some of the positive steps that they're taking.
Yeah, that's right. So we actually invested in this company called Wealthnavi at the IPO. And this is a company that's developed a robo advisory business for workers within the age group of 25 to 40. So we are talking of a much younger demographic. And as you mentioned in Japan, if you're a salaried person, the opportunities for investment, whether it's for your pension pot or your children's education, so very long term kind of investment, the options were literally just twofold. One, you basically stick all your cash in the bank, and where you basically earn no return. In fact, you pay the bank
Yes.
in real terms because the interest rates are pretty low. And the other option is to buy real estate, and maybe you let it out to someone, that kind of traditional investment. So apart from these, there are hardly any other options. And traditionally, Japanese people have always been a bit skeptical of their own stock market. There is still a big scar from the bursting of the asset bubble in the 80s. So the participation of the domestic investor in their own market tends to be much, much lower compared to other Western markets. So what Wealthnavi is trying to do is change that perception. And there have been a lot of other firms that have done similar things in the past, but the problem is they've approached it purely from the way of sales and marketing. So they would flog a number of products to people, confuse them in the process, try and sell them stuff that they don't need. Wealthnavi is basically simplified everything. You basically answer three or four simple questions about your risk tolerance, what are you trying to achieve, and they give you a very, very narrow menu of options to select from, literally six or seven funds. Most of them tend to be exchange traded funds. You can choose a global fund or a sector specific fund, and their costs are one of the lowest in the industry. So no salespeople, no sales, an army of salespeople, almost a do-it-yourself type platform, and that's struck a chord with the target market, simply because it's very easy to understand. The interface is very slick, charges are very reasonable, and they're constantly adding new and new features. So that's resulted in pretty rapid growth in the number of users, and sales are still growing at 60-70% year on year for this company. So it's quite an innovative, disruptive company in that space, we believe.
And I mean that again, I'll use the word again. The democratization of traditionally quite opaque sectors is going
Yep.
underway, is underway. Do you, another area within finance is what we call microfinance, which is essentially
Yeah.
banking for the unbanked. And now I believe you've invested in quite an enigmatic entrepreneur in this space. Can you tell me a little bit more about Taejon Shin?
Yes. So Taejun Shin, he's as you mentioned, he's quite an enigmatic and very, very un-Japanese entrepreneur. He's of South Korean descent, and he's traveled the world. He's I think he's a black belt in karate. He's got a pretty high rating in a very complicated game called Go. Um, and he founded this business called Gojo, which is a private company. It was our second private company investment for Shin Nippon. And what Gojo does is it operates as a holding company, and it's built majority stakes in some of the leading microfinance and affordable lending type businesses within emerging markets. So, for example, in India, they have over half of a company that is within the top 10 companies in microfinance. Similarly, they've got large stakes in similar businesses in places like Cambodia, in some of the ASEAN countries. They're looking to expand in Africa as well. So their whole idea is to provide not just capital that they raise in Japan, but also some of the technical expertise that they have in Japan, and try and accelerate the growth of these businesses, make them a bit modern. In India, for instance, the company that they have the majority stake in, recently, a few years ago, they started taking non-cash payments from the people that they've lent to, and these are all people who don't have access to any formal banking accounts. Most of them are women, female entrepreneurs, very small scale entrepreneurs. They don't have bank accounts. So microfinance is kind of trying to fill that gap, and they're using a similar playbook, in Africa. They're trying to use it in Africa. They recently bought a business in Central Asia as well. So really, really interesting business, and you could almost think of it as a very nice way of getting access to emerging market growth from a company based in Japan,
Yeah.
because it's quite difficult to get that level of access in emerging markets where the growth story is still pretty huge.
And I understand he has a secret set of 70 questions to assess potential partners. And what he really wants to understand is whether management can manage breakneck growth. So I imagine you might take some tips from this questionnaire too.
Yeah, exactly. And I think that's the first thing that sort of caught my attention when I was initially doing the due diligence. Before investing in this company, I had a number of calls and meetings with Taejun Shin and the CFO Kohei Katada and a few other people. And I got the feeling that Taejun was probably, the way he thought about these kind of fast growth businesses, what was not too dissimilar to the way in which we think, at Baillie Gifford. So we place a lot of emphasis on management, because ultimately, you are putting your faith in management, whether they are good stewards, going to be good stewards of our capital, whether they are more growth focused or are they very cautious, very conservative. So you're trying to answer all these questions. And as I mentioned, especially for the smaller companies, we are always looking for ambitious, dynamic entrepreneurs who are not afraid of taking risks. Yes, that might mean they might make losses, etc., but that's part and parcel of what they're trying to do. And we found echoes of that sort of sentiment in how Tejun Shin spoke about the way he went about doing his due diligence, which was one of the attractions of the investment case for us. So yes, you're absolutely right. There's quite a bit of commonality there in terms of how he thinks about the businesses and how we think about businesses as well.
Excellent. Okay. Well, that concludes the end of our discussion. I'm now going to turn to some of the questions that have come in from our viewers as we've been chatting, which is quite a lot. I've got a laptop full of them here. Um, let's have a look. Let's start with, there's quite a lot addressing sort of share price volatility. So should we, I know you've touched upon that when we talked about sort of the pandemic. Should we address the share price volatility upfront and tell viewers
Yes.
kind of who may have experienced that volatility, maybe give them some reassurance whether or not that's going to continue or it's all part of the ride with Shin Nippon?
Yeah, sure. So, I mean, if I had the ability to predict, share price moves, I probably wouldn't be sitting here today. I would probably have made a lot of money. The problem is, obviously, and from the point of view of an investor, if I were to put myself in, an investor's shoes, I would probably feel a bit unnerved as well. But I suppose the thing to bear in mind is, if you go back all the way back to the global financial crisis, which was, quite a dark period for markets, as it were. Once we got out of that, since then, up till about a year and a half ago, and we're talking of I don't know, 14 odd years, we've actually had a graph that looks like bottom left to top right. So things have basically been very very favorable for growth investing, these types of new kind of age companies. We talked about software as a service earlier. So we've had a very very exceptionally long and quite unusual, to be honest, period of benign environment for companies in which things have generally gone in the right direction. So some level of correction, even for us, we were always kind of expecting. For us, as, at least, it doesn't come as a big surprise that we've seen a bit of a drawdown in the last 12, 18 odd months. And the second point I would make is just going back to what I said earlier at the beginning is what we're trying to do here is play the long game. So we're investing over a 3 to 5 year time horizon. In most cases, over half of the portfolios in companies that we've held for over 5 years. So the hope would be that if we pick a decent number of really big winners over long periods of time, the kind of returns they would generate for shareholders would more than make up for the other stocks that don't work out. And obviously, this is a small cap, high growth strategy. It's inherently likely to be very volatile. So, personally, I would say that this is part and parcel of what the strategy is trying to do. It will be volatile, you will have sharp drawdowns, but equally on the upside, we hope that we um, there's a much sharper kind of an upswing as and when people start focusing more on the fundamentals. Because at the moment, I think there's a lot of emotion, a lot of fear that's driving markets. Fear of inflation, fear of I don't know, maybe war in Europe or whatever. Fear of you know, are we going to get a new variant? Things like that. So people have basically forgotten about fundamentals. So if you look at the fundamentals, you'll still see that these companies that we own are still continuing to churn out really fast rates of growth. But if you look at the share price, you would think, oh my God, something's horribly wrong. So I would say, you've got to be patient. You've got to keep the faith. We are not going to change the way we invest. We've always prioritized high growth investing, always look for these types of dynamic risk taking entrepreneurs, always look to identify the real big winners that give us not 2 times, 3 times, 4 times upside, but more like 30, 40, 50 times upside
Yes.
over 5 to 10 year period. And that philosophy, that process for us, it's delivered quite attractive returns for shareholders over long periods of time. And I think that has historically worked for us. So there's not going to be any change in that philosophy, that process, as a result of what's happened in the last 12, 18 months.
So for viewers and investors, this is just a reiteration that this is really is quite a high octane strategy, and it comes with that label.
Yes, it does. And having said that, that doesn't mean that we are burying our heads in the sand and hoping that everything goes fine. Obviously, there are two aspects to our job. When we say we are an investment manager, there are two key aspects. One is the stock picking bit, which is where we hope that out of 10 stocks, if we pick 3 or 4 stocks that end up going 30, 40 times in the next 5, 10 years, then we probably done a decent job. And the second aspect is portfolio management. And it's more the second aspect that we've been trying to do in the last 12, 18 months, where we've literally looked at every single stock and tried to work out, in terms of the big run up in the share price that they've had during the pandemic, how much of that is divorced from the fundamentals, what do the valuations look like. In a number of cases, even we felt that the share price had run far too ahead of the fundamentals, so we've actively cut down on our holding sizes in those stocks. Equally, where we felt that the share price reaction is completely divorced from fundamental, the shares have fallen much too harder, much too lower, we've strategically added tiny amounts to our existing holding. So that kind of portfolio management activity is continuously happening in the background. But on the whole, what is not going to change is the way we think about growth, our emphasis on growth, our emphasis on identifying these types of, the big, big winners of tomorrow. And that sort of process, that team-based approach of speaking to, different people, different teams, speaking to the American team to see, what they're thinking, what they're seeing in emerging markets, getting different types of inputs. That kind of holistic process is not going to change. And I mean, our belief is that if we continue to do what we've been doing in the last 10, 15, 20 years, hopefully, shareholders who are patient and willing to kind of take in the volatility, they should see really attractive returns in the long run.
Okay, so I'm going to bracket together a few questions which are essentially along the same theme. And they are, do you and your team feel disadvantaged due to not being able to travel and meet in person your portfolio companies due to COVID restrictions? And also, how do you come across opportunities if even the local fund managers haven't come across them? So
Yes, so I'll take the first. Actually, I'll take the second question first. So it's quite amazing. I've reiterated this a few times in our chat, Amy, that a lot of the companies that I meet, and in fact, a lot of the companies that I own in the portfolio for Shin Nippon, a fair few of them, even the domestic investors, wouldn't have heard of it. And I'll give you a very funny anecdote. So I was in Japan about 4 years ago, doing a pitch for a potential big client, and this was a big pension fund. And they asked me, okay, why don't you give us an example of one of your best ideas? And I picked the example of a company called bengo4.com. Bengo shi in Japanese means lawyers. So this is a lawyer matching website. So it connects people looking for legal advice with lawyers. And they've also got another rapidly growing business which is very similar to DocuSign. So with the rise of digital contracts, etc., that business is seeing absolutely explosive growth. They announced their full year results recently, and that business grew pretty close to 200% year on year. You wouldn't think that if you looked at the share price of this company, though. And I spoke to them about how I came about this company, how I read an interview of the founder who was 27, 28 at the time in the Nikkei, and I organized a call with him, got to know his story, his life history really, and then decided to invest. And the main guy who was sitting there was asking me these questions. He looked at me with a really bizarre expression. He said, "How come we've never heard of this company?" And he was asking his sidekicks and saying, "Why don't you go check?" So there are loads of examples like these, because the companies, this kind of universe that we're looking at for the small caps, there's absolutely very, very limited to non-existent analyst coverage. The reason for that is because in Japan, you have these sell side analysts. Their incentives are not aligned to covering these kind of idly piddly companies that no one even in Japan knows of. they have much better career progression prospects if they are covering a Toyota or a SoftBank or all these big marquee names. So you have an entire swathe of the market that's basically, undiscovered. And that is where I think for us not being able to travel to Japan has been a slight disadvantage. I wouldn't want to overplay it. um, Typically, the main reason we go to Japan is to meet these companies in their kind of environment, in the headquarters, quite often traveling far off distances. I've personally done a bit of a trek to actually reach the headquarters of a company that was based on a wee hilltop. And that experience and the way they treat you if they see that you're a foreign investor, a lot of the times that would be the first time they'll be seeing a foreign investor, and the kind of engagement you get with management, the quality of discussion tends to be much much higher than you would in a conference, for example. So not being able to do that has been a slight frustration, but equally, we've seen a flood of Zoom call requests from management because they no longer have to plan a trip to Edinburgh, and all the logistics involved with that have gone away. Basically, they just need to send me a link, and off you go. So bizarrely, the number of calls, the number of engagements with senior management has actually probably grown at least twofold thanks to the pandemic. But it's the experience bit, the walking around the streets, visiting some of the stores to see what's happening. That is the bit that we've not been able to do, and hopefully we'll get to resume traveling
So
to Japan at some point later this year.
I think a bit like everybody's pandemic experience, it's been a bit of a double-edged sword. Then I see.
Yes, definitely, yeah, yeah,
Okay, we've got another question here, and it's tying in with Japan's a lot of misconceptions here that or lots of
yeah,
big
yeah.
changes that we're discussing here. Um, so the World Economic Forum in 2021, it had a global gender gap report, and Japan ranked 120th out of 156 countries. Um, so well, what is being done about gender roles, which are still deeply rooted in Japanese society, and do you work with many women entrepreneurs, and are you seeing change in this area?
That's, I think, it's a fantastic question, and unfortunately, it pains me genuinely to say that Japan's not covered, or it isn't covering itself in glory when it comes to gender representation, whether it's across corporate Japan or indeed even in the government. I mean, you look at the number of MPs or leaders in key kind of positions that are women, and you can basically count them on your two hands. Um, so there's been a lot of noises made even when Mr. Abe was around. Obviously, womenomics, as he called it, was a big kind of part of one of his arrows. But unfortunately, as with most things in Japan, there tends to be a lot of noise, but there tends to be very little action on the ground simply because the vested interests are so strong and so entrenched. It takes quite a long time for the message to filter through. Now, thankfully, within the corporate space, we are seeing a number of startups, for instance, a number of younger companies that have been founded by women, and who are doing some quite interesting, who are entering interesting areas of business. So I personally have spoken with at least about 6 or 7 such female entrepreneurs in the last 12 to 18 months. And just to give you a flavor, one of the founders I spoke to of a private company. So she's established a business called Agatha. And what they're trying to do is they're trying to automate the entire clinical trial process.
Oh wow.
So in a clinical trial, as you can imagine, if you're a global company, you're probably running a global trial with patients being recruited in different countries, all a lot of paperwork being filled, a lot of regulatory requirements being fulfilled, and there would be another company that would help you with recruiting not just the patients, but speaking to hospitals, saying, okay, would you be able to take part in this trial, etc. So there's a lot of legwork, a lot of paperwork going back and forth, and they've basically built a system that centralizes this entire thing. So every party that's involved in the clinical trial can actually get access and see, okay, what the approvals look like, what are the gaps that we need to fill. So it makes the whole process a lot easier. So quite a clever and very very interesting business that's actually solving a genuine problem. Um, so you are getting female entrepreneurs. Another female entrepreneur founded company I spoke to was a gaming company that's designing games specifically for women, and it was founded and run by you know a couple of twin sisters. So I spoke to them. Really fascinating story, and they're still quite small, but growing quite fast. They've already developed a bit of a cult following for their kind of female centric games.
And how
So
does the taste vary then? What sort of genres are women gamers into?
I mean, in Japan, it's still heavily dominated by the more kind of romantic role play type games that Japanese women tend to like. But I think the interesting bit is they were showing me some statistics, and actually, female gamers per person tend to spend a lot more, obviously, if they get hooked onto a particular game than men. So you've got to make sure that the game hits kind of the right notes, and it appeals to the kind of a cross section of the female gaming population. And the female gaming population is growing probably much faster than the male gaming population globally. So just a couple of examples of the different types of businesses that we're coming across that are founded and run by female entrepreneurs. But the caveat is we're talking about kind of the proverbial drop in the ocean. So we would ideally want to see a lot more of this happening, and the hope is that as some of these businesses become successful, as they scale up, a lot of these female entrepreneurs end up being a bit like role models that would encourage the next kind of wave of female entrepreneurs to come through.
But from a societal perspective, women have often played an integral role in the domestic finances. There is the saying Mrs. Watanabe, and I understand there's a Mrs. Watanabe 2.0 maybe appearing, and this is a woman who is much clearer about her consumer choices and has the potential really to sort of change the dynamics. Do you want to talk me through a little bit there?
I mean, that's definitely true, and we are seeing that a lot more, especially in kind of the consumer goods space, retail, for instance, where if you talk about kind of apparel or cosmetics, etc. Yes, traditionally it's been kind of more women-led, but you're actually seeing a lot more appreciation for innovative products in those areas. A lot of that appreciation is being driven by women. And again, I think one of the areas where we've historically not seen female participation, but which is gradually changing, is more in the traditional manufacturing side of things. So I've spoken to few businesses that are traditional. They're not your classic sexy startups, tech startups, etc. Very traditional businesses, and they've got a female CEO now who's actually worked through the ranks, really really capable, and they've been promoted to kind of the top job. So something like that would have been unheard of and unthinkable in terms of happening in Japan maybe 10, 15 years ago. So there are kind of green shoots, few signs of change, but obviously we would want to see a continuation and an acceleration, if anything, of this particular trend.
So it's not quite showing up in the World Economic Forum's statistics yet, but
No.
on the ground, you are seeing signs of change. That's great.
Yes.
Okay, in the last few minutes, got a couple of last questions here. One of our viewers is interested in what percentage of your portfolio is invested in loss-making companies, and how many of these do you expect to make a profit in the future? Okay, so I suppose this is about your appetite for loss. It's not gambling, is it? But what's your appetite for risk taking? I suppose here.
Risk taking, yeah. So again, that's an interesting question, and this is not something that we track or measure on any regular basis, i.e., in terms of the percentage of portfolio that's loss making, because sometimes even the more established companies can make losses in a particular years for specific reasons, and then that kind of muddies the water. But what I would say is we do have a decent number of stocks that are at the moment making operating losses, and we expect them to make operating losses at least for the next kind of 2-3 years. And these would be companies where typically they would be quite immature, quite young, and where the management would be investing very, very aggressively to secure, long-term growth. And the types of areas and activities typically where they would invest is mainly in things like advertising and marketing, personnel costs. Now, that's obviously a big part of the overall cost structure, simply because if you want to hire, really talented developers, software developers, for instance, there's a massive shortage of those people in Japan. So obviously, you've got to pay up to attract talent. So personnel is quite a big part of the component. At the moment, for some companies, the input costs are going on the higher side, simply because the oil price is at quite high levels, and generally commodity prices have been going up. So for the more internet type businesses, the investments that they're making mostly on personnel, on all the building out the IT infrastructure, and other related costs, it's those types of spending that we are absolutely comfortable with. Now, if there was a company that was still small, mature, but they're spending money on acquisitions, or they have ambitions of expanding outside Japan, we're going to take over the world. If management have that kind of thought process, that would be something that would ring alarm bells in our minds. But thankfully, we don't tend to have those types of businesses. So overall, I would say there are a decent number of businesses that are making losses. But the critical bit for us is, as long as they're making losses, that's fine. But we would still want them to keep growing their sales at a rapid pace. The big worry for us is if a company is making losses and not growing its sales as fast as we would want. That would again set off alarm bells. So for vast majority of the loss-making companies, the sales are still almost doubling year on year, which is absolutely fine with us.
Excellent. Okay, so I imagine also the concentration of the trust with just 40 to 80 stocks means that you can keep on top of those numbers and also and make sure that you have the relationship and that dialogue to ensure that you understand what the strategy is in each of those cases.
Exactly. And at the beginning, as I said, we tend to be high conviction investors. By that, what I mean is we only invest in companies where we have a reasonable degree of confidence in terms of the long term success. And obviously, who knows what's going to happen in the future, but we have, internal kind of milestones that we track for each company, depending on whether they're hitting those milestones or whether they are veering quite a different direction, which would again cause us to uh, take a pause and reassess the investment case. um, but yeah, for each company that we own, it's very high conviction investing. As a company goes from being an immature through journey towards a mature business, we tend to increase our stake in the business as our confidence increases. So we end up owning a decent chunk of the overall company in some cases. So that tends to be the path that um, almost like a life cycle of a holding within the trust.
Okay, and right in the closing couple of minutes, I'm sorry to put you under pressure here, but this is one question
No, that's
that's
fine.
come through. What is the worst mistake that you've made, and maybe what have you learnt from it to end on?
Yes. I have to say the worst mistake, there are actually a couple. So the first worst mistake I've made is in terms of selling things too quickly. So I keep track of every single stock that I've sold. I've got a wee spreadsheet that I keep just for my personal purposes. And it really pains to see that some of the stocks that I've sold have actually gone on to become multi-baggers. So obviously, although I've decent level of experience in investing, I mean, the one thing that I've learned in this job is you can never call yourself totally experienced and knowing everything. It's a constant learning exercise. This, I mean, that's the beauty of the job. You don't stop learning. So this exercise for me is learning in terms of why did I sell that, where was my analysis wrong, and what actually went right for this particular company, for the share prices to go x 6 times 7 times since I sold. So that kind of continuous learning process is quite important. So that's the first mistake. Second mistake, um, I would say, is not being decisive enough in just going and buying a few stocks, because especially in small caps, you got to bear in mind, timing can be quite critical. You can always feel that, okay, I don't have enough information. Maybe I need a bit more of that, a bit more of this. But You will always operate in an environment of information vacuum. You will never have 100% complete information. And there are some studies that have been done that said more information doesn't necessarily make you a better decision maker. So at some point, you got to draw a line and say, okay, I know enough about this to actually start taking a small holding, and then over time you build your knowledge base. So that's one thing that I've consciously put in practice over the past kind of 6 7 years, where if I see a particular angle with a company that everyone else is missing, have a call with management, try and assess, what the long-term opportunity could be, and can this be a multi-bagger? And if it ticks some of the boxes, not all, you take a small holding and then build
It's
your
like
knowledge base off
you're
of
like
that.
an
So
investigative journalist. You've got a story, and you've got to get your sources together to corroborate.
in many ways, yes. And I suppose that the point is, if you pick enough of those kind of names that then end up doing exceptionally well, then even if the vast majority of the portfolio performs in line with the market or maybe slightly underperforms, you would still generate a significant positive outcome for shareholders.
Okay, right. Well, we're bang on time. That's all we've got time for. So thank you very much, Praveen, for your honesty there in answering that last question, and also for sharing all of your knowledge and expertise in the
No worries,
under
for
the
pleasure.
radar world of Japanese small caps.
Yes, no, it was really fascinating sharing these insights with you. So thank you for having me.
Okay, and thank you all for your time, viewers. Thank you for watching and for your questions, of which there were many. We've more sessions like this coming up, so do keep an eye out for those if you found today useful. That's it from me. Thank you very much.